Ladies and gentlemen, good day and welcome to Q3 FY26 Cemindia Project Limited earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Nidhi from ICICI Securities Limited. Thank you and over to you, ma'am.
Yes. Thank you, Muskan. Good evening to all. On the behalf of ICICI Securities, I welcome you all to the Q3 FY26 earnings call of Cemindia Projects Limited. Today we have with us from the management, Mr. Jayanta Basu, Managing Director, Mr. Nitesh Sharma, the CFO, Mr. Ritesh Agarwal, Head of Investor Relations. We begin with the opening remarks from the management, followed by a quick Q&A. Thank you and over to you, sir.
Yeah, good evening everyone and thank you for joining us on the Q3 FY26 results Concall. This is Nitesh Sharma. So before we begin, I would like to mention that our discussion today may include certain forward-looking statements relating to Cemindia Projects Limited. These statements are based on management's current expectations and assumptions and are subject to various risks and uncertainties. Actual results may differ materially from those expressed or implied in such statements. So let me first start with the financial performance for the quarter and subsequently our MD Mr. Jayanta Basu will be taking you through the operational performance of the company. So we are pleased to share that Q3 FY25-26 marked another quarter of good performance for the company. The key highlights for Q3 FY26 are that the total operating income stood at 2,315 crore in Q3 FY26 against 2,270 crore of the previous corresponding year quarter. EBITDA stood at 245 crore in Q3 against 217 crore of previous year, which recorded a growth of 13% on year-on-year basis. The EBITDA margin was at 10.6%. We recorded a PAT of 111 crore in Q3 FY26 against 87 crore of the corresponding quarter of the previous year, again a 27 growth on year-on-year basis. Now, the financial performance for 9 months stood at ending 31st December was operating income at 7,087 crore in 9 months against 6,714 crore in the previous year, a growth of 6% year-on-year. EBITDA for 9 months stood at 749 crore against 668 crore in the previous year 9 months period, a growth of 12%. EBITDA margin at 10.6%. PAT of 356 crore in 9 months against 259 crore of the previous year, a growth of 37% year-on-year basis. The company stood at a very conservatively financed with a net debt equity of 0.26x, we would say. Now, during this 9 months period ending 31st December, the company has secured order worth 9,725 crore. Post December 25 till date, we have also secured orders worth 2,000 odd crores. So that makes the total order book in the current year as 11,700 crores. The overall pending order book in hand today stands at 21,800 odd crores. So this was from my side. Now I would request my MD Mr. Jayanta Basu to take forward on the operational performance. Thank you.
Good evening. Welcome to this Concall Q3 25-26 of Cemindia Projects Limited. I think Nitesh has covered all the parameters related to the last quarter result. As you can see that revenue has increased moderately, around 5.676% compared to last 9-month quarter 2024. There is a reason behind that which I will explain. But I am very happy to share that our profitability has increased a lot. Our PAT is now around 5%, which was 3.9% last year for the same period. 259 crore becomes 356 crores. Similarly, EBITDA is close to 11%. And you might have seen that for several years our EBITDA used to be around 9 to 9.5. For last few quarters we have been able to maintain more than 10%. So these are the good signs. Regarding revenue, I think two factors has impacted, otherwise it would have been a little more. We secured a job at Project Bhadavan, the port job, that was secured a year back. Not year back, say beginning of this year, last year. And we would have expected some revenue from this project. But because of some issues related to local problem and all, you must be knowing that every day in newspapers, we were able to make hardly any progress. So that has really impacted our revenue. And similarly, the order flows, we have secured around 9,000 crore orders by this time. But this order flow will impact coming quarters. In the last year, if you see, our order up to Q2 was only 2,000 crores and quarter 4, 834 crores. So whatever order we have secured last year, that is being matured now for revenue, which is compared to less as it should be. So these issues are some deferred revenue because of delayed order and Bhadwan port not getting created has really impacted our revenue. Otherwise, we would have been very happy to report around 18 to 20% revenue more than last year. So having said that, profitability is better, and I have to share there are some significant or good things which has happened last year. We have completed the Mumbai Metro Tunnel. We have handed over a beautiful building to Government of West Bengal, that is new High Court building at West Bengal. We have completed Bijinjam Port. We have completed Udangudi Port. We have completed Calcutta Metro. You know how difficult it was a few years back. So some big challenging job we have completed last year, which is a good achievement or a very challenging job. And now our main focus is to handle few more challenging jobs like Project Varsha, like Pune Metro. We have received the order few months back, and Dahej Petronet and Ruiz and Abu Dhabi. They all say that them and our jobs are all going well, and I think that quarter 4 result will be better than quarter 3. And there are opportunity-wise, it is something like that. You may get one order which may impact you a lot because the big ticket jobs are waiting, and each job will be 5,000 to 10,000 crores. There are few jobs in that range. If we are lucky, if we get one or two jobs in that big ticket job, the whole scenario will change. And we hope that we are working very hard, and we hope that some of them will be secured by us. So, good orders secured so far, opportunities are ahead to secure some more order, big ticket jobs, profitability is better, finance is good. So that is what from my side. If you have any questions going forward, please ask. I think that's all from my side.
So we can open the floor for the question and answer.
Yes.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Dhananjay Mishra from Cemindia Securities. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes.
So just wanted to know, as you said that a lot of projects got completed in this current quarter, and we have seen very strong margin expansion. So I guess this is kind of one-off because we got a lot of order completed, or is it going to be a kind of double-digit margin sustainable for upcoming quarter as well?
Yeah, that is the endeavor. We definitely have double-digit margin, which is expected next quarter or going forward, yes. And that is consistently are doing. If you see last quarter also it was double-digit margin. I'm talking about EBITDA. This quarter also a little bit more than last quarter. So, yes, that was good.
Because 1% improvement is something on higher side, and despite we have done this new labor code provision of 16 crore, and so that is one. And can you give some roadmap about order inflows pipeline for next 3 to 6 months, whether these orders will come from group or outside private and government, and which sectors you are expecting order for 6 to 9 month basis at least?
Yeah, I mean, okay. So far, around 9,000 odd jobs till now, and there are jobs we have submitted our bid, and we are waiting for the results, like Bhadravan Port, metro jobs at Delhi, and one port job in Odisha. There are plenty of jobs from the group, including data centers. So, I think tenders, but yet to open will be around 40,000 crores. And another 30 to 40,000 crores tenders we are now. So, that is the kind of future job. So, coming quarter,
You go ahead.
the coming quarter, this is quarter, itself we may secure few jobs for the group, which are on the discussion. So roadmap wise, if you see that, we still maintain that another 2,000-3,000 crores of job will secure this year, which is February and March. And Q4 or Q1, Q2 next year, there are some big ticket jobs. It depends upon when government opens the tender, what the timing. So if it is happen, then there are quite big ticket jobs which will change the whole scenario.
And lastly, on guidance front, because of this Q3 soft revenue, or as you said, the deferment happened in Bhadravan Port order. So what is the status over there, and are we still maintaining 11,000 crore mark, or maybe 10,800 crore mark? For that, we have to achieve 3,600 crore kind of turnover in Q4. So what is in your view?
See, it is not very sure how Bhadravan will take place, because it is totally not in our control. But at the same time, the Pune Metro should start producing something, and that project at Ruiz that are now producing something. So I think that it will be at least 15 to 20% more than the quarters, roughly.
Of the current quarter?
The current quarter, yes.
20% more? Okay.
Yeah. Estimate. Yeah.
So that is all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Neeraj Mansinga from White Pine Investment Management. Please go ahead.
Thank you for the opportunity. I just wanted to understand about the data center. Adani has a plan of data center on its own, as well as a joint venture with global hyperscalers. One, I want to understand how much are you ready to and in capability to take those orders, and number two, what is your visibility on the orders of those coming in and the execution of those?
Yeah, this data center is under discussion for last at least 7-8 months since Adani started, taking over this company. And we have ramped up our capability during this last few months. We have recruited several engineers, those who are experienced in data centers. We have visited a lot of sites all over the world to see how this happens, what is the method, what is the know-how in this business. And we have already started 2 data center building in Mumbai, and foundation work is already completed. Precasting work also have done. So we are in readiness to take up this activity. Visibility that Adani has got a big plan, and even if we do half of that, that will be quite big for our company.
Got it. And any potential, if any thought process on how much is your opportunity size for you on the data, maybe on a per megawatt basis? This helps me understand how much you are present in the data center.
Per megawatt, you are asking about the cost?
No, I'm asking how much you would be capable of doing the project. Like
The data center of 120, 130 megawatt, typically it's a 2-year cycle from beginning to the commissioning. 2 years to 27 months. So we have already secured 3 data centers of similar capacity. We may have another 2 or 3. Each year you can do around 500 megawatt, roughly with present capacity.
This year means FY March ending 26.
Yeah, it depends upon the secured, if you secure the job. Now what happened, when you secure the job, there are 2 parts. First part is the civil, second part is the balance.
Yeah.
Now, civil part is hardly 20%. We may not see that ramp up in revenue in the first year, but second year definitely with the electromechanical part, balance 70% or 80% revenue will come. We have to factor all these numbers when you calculate the revenue from data centers.
And sir, how much, if you take example of say 120 megawatt, how much would that, if you get an order of 120 megawatt, how much revenue could you book, order can you book on that side as a potential range?
If you are asking a direct question, what will be the price of 120 megawatt? It's very difficult to answer because it depends upon the condition, depends upon where it's doing, what are the terms and conditions of the project, something is supplied free. But what I can say that 120 megawatt timeline may take 2 to 27 months time, and first year 20% revenue, next year 80% revenue. These are the guidelines you can take.
Okay, sir. I'll come back to the queue. Thank you.
Thank you. The next question is from the line of Vaibhav Shah from JM Financial. Please go ahead.
Yeah. Can you provide some clarity on the Bangladesh order status right now?
Bangladesh work is going on absolutely okay. I mean, there are natural reasons why everybody should get scared, I know that. But local government is really supportive to us. Not only us, to any foreign company, those who are working there. And our people are quite okay. We are delivering the job as per our schedule. We are getting paid on time. And we are almost completing the piling job by end of May. So that our majority of the work will be completed.
So what is the outstanding book as of December in the Bangladesh order?
Outstanding, I have to check up. Give us some time.
Okay. Sir, secondly, when do we target to complete the Bangladesh order in FY27?
Bangladesh order will be completed. You see, physical work will be completed before next monsoon, that is May or June next year.
Okay. Okay. Sir, if I got the number correctly, so our year-to-date order inflows, including the 2,000 crores which we won in January, it should be around 11,700 crores?
Yes, you are absolutely right.
Okay. Okay. Sir, how do you see the margins going ahead? So it should be double digit, right? Between 10 to 11%?
I think you don't expect too much of hike, but the same margin pattern will be there, 10% to 11%.
Okay. Sir, lastly, one bookkeeping question. What would be our gross debt as of December?
700, no? Then it's close to 920 crores gross debt.
Okay. Okay. Thank you, sir. Those are my questions.
Thank you. The next question is from the line of Vinay Chaudhary from Invexa Capital. Please go ahead.
Hello.
Hello.
Yeah. Yeah. So, like,
I'm sorry to interrupt, sir. Your voice is not audible.
am I audible?
Yes, sir.
Yes. So, in the last quarter, we had basically the inflow of about 7,100, and we had a couple of L1, like Pune Metro and sewage plant, of about 3,000 odd crores. So, what is the status of those L1? And because that also totaled up to about 11,000 plus, and currently also we are about 11,000, including the two projects what you mentioned. So just wanted to have some clarity and fill in the gaps in that.
I will not be able to connect last quarter, but I can tell you the present status.
Sure.
So far, I think we have got around total 11,700 crores, and that includes Pune Metro of 1,500 crores as well. And there are no such job where we have L1 except a small job in Sibar of 100 crores. But there are plenty of jobs we have submitted our bids. So it depends upon how it comes out. I think we have submitted a bid of around 25,000 crores total. Out of that, one job we are already secured our L1, that is that group company called Adani, More Sagar project in Rajasthan, which is around 3,500 crore jobs. So that will be added to the kitty very soon. Yes.
Sure. So about 15 odd thousand what we were expecting. So is there any upward revision what we are expecting in this year?
So I still maintain around 15,000 crores, because what has happened, few of the government tender which we are expecting to have already completed is still getting delayed. And as well, some group jobs also getting little delayed. It's a matter of time, otherwise we would have achieved 15,000 crores this year.
So will this, the delay, will that, come up in the next year, or it's a kind of a lost kind of a bid for us?
No, it's not lost. It will come next year. It's a matter of time lag. That's all. Yeah. I mean, if you get, you will get now. You can get later on also. So that is the issue. Whichever you get or do not get. But if you get now, if you get later on, that is not going to affect much in our progress, financial progress.
Okay. Sure. Thank you very much.
Thank you. The next question is from the line of Aditya Sahu from HDFC Securities. Please go ahead.
Hi. I hope I'm audible.
Yes.
Yes, sir.
Sure. Thank you so much, sir, for the opportunity. I do have a few questions. I think it may be a bit repetitive. I got disconnected in between. What would be the revenue guidance for FY26, the revenue, EBITDA margin, and the order inflow guidance?
Well, I think to answer your question, this is a big issue, because we spend month after month to evaluate how much is the revenue and all. So it is not appropriate for me to give you correct number. But as I have maintained, it will be around 15 to 20% rise in the revenue. And EBITDA margin. Yeah.
And on the EBITDA margin, 10-11% is what I could gather.
Yes.
On the order inflow front, you have mentioned 15,000 crores. I hope that would be the correct number.
Yeah, I think, there are few jobs which are quite big. And if you are lucky to close one of them, the number can be anything. I mean, it can be 10,000-12,000 to 20,000-25,000 as well. So,
Understood, sir. Of this, how much are we expecting from group entities and what percentage are we expecting from group entities?
yeah, I think we'll maintain a number of 20-25% from group.
Okay, 20-25% from group entities. And what would be the current bid pipeline that we have, and how much of that is also from the group entities? If you can throw some light on that.
Current work pipeline, a few data center jobs from the group, which they are developing in many places, and some job, as I mentioned just now, more Sagar one irrigation job in Rajasthan, and maybe some road jobs if they get.
Understood, sir. On the value terms, if you can provide the bid pipeline.
Value terms, whatever I have said, going forward I don't know, but immediately maybe around 10 to 12,000 crore job may come to us.
Understood. In terms of the capex, so I understand that we did a capex of about, I think last time the guidance was 300 crores for FY26. Is that the same capex guidance that we have right now, and how much have we deployed till now?
See, it depends upon again which job you get, because last year we have secured many building jobs where we have to invest a lot for formwork material. Though it is not as costly as plant equipment, but still it is costly because nowadays everybody go for system formwork. So there we have to invest a lot, and a few general plant have procured. So these are also in the around whatever we spent last year, 300 crore, this will be 10%, 15% more than last year.
10-15% more.
In 9 months, we have spent around 200 odd crores towards the game.
Understood, sir. Understood. Yes, please. And in the current order book that we have of 21,000 crores, how much of that is from the group entity going to another fund?
27%.
27%. Understood, sir. On the Vadhavan port that you had mentioned, the delays in that sense, any visibility as to when do you see that happening, and also how much, what would be the contribution of that particular order in the overall order book?
It is 1,600 crores.
Yes, 1,600.
Out of 21,000 work in hand.
Less than 10%.
And we have got visibility. We cannot speculate what may happen. It is not in our control.
Understood, sir. Understood. Thank you so much, sir. Thank you so much for that.
Thank you. The next question is from the line of Jay Shah from OHM Portfolio. Please go ahead.
Hello, sir. Thank you for the opportunity. My question again relates to the Vadhavan port delay that you talked about in this quarter, where apparently we have seen a revenue loss, but your margins are actually better. So how should we think about it? Because if your revenue loss is due to work not being done, then that means that you have not been able to deploy your people or equipment, and you have resulted that into revenue loss. Then is there also a corresponding expenses that should have come in? Or does it mean that the rest of the business was at much higher margins? That's my first question. Thank you.
Well, revenue loss because work hasn't happened, so that is a direct, you can see that. I'm sure another 200-300 crore revenue would have been more at this Vadhavan port is in operation. And regarding margin betterment, we have done good. We have efficiently handled the project. Yes, and that is how this margin is better.
No, so do we understand that 200 to 300 crore revenue loss is the unbilled item, in which case the expenses are also booked? So perhaps your margins are better than what you have reported.
So actually, definitely we have not spent 200 crore of expenses in Vadhavan port. We are very cautious We have very small and scanty setup at site because
I see.
expenses are mostly because of the material, what we source and what we done, and which converts to revenue.
But you were able to redeploy your people to other projects.
So in Bhagwanpur, hardly 2 or 3 engineers are there. That's all. There are expenditures.
I see. But even the redeployment of people did not yield to higher revenue from on an overall basis, is it?
I couldn't get you, sir. What is it?
I said that if you could not proceed with the Vadhavan port order and there was some loss of materials and whatever, but you were able to redeploy your team, that team should have helped you to recover that revenue from other projects. Or were they idle for the quarter?
Yeah, I mean, see, in a large company like us, 5, 6 engineers here and there doesn't make much difference. So even if you have a team of other one working somewhere else, does not mean that they are generating the extra revenue because the project is free.
I see. And next quarter, you are able to figure out as to where to redeploy and recover the turnover lost, is it? In this quarter, basically.
We want to redeploy tomorrow, provided if the situation favors us.
No, I'm saying that your Vadhavan is delayed, but you are able to redeploy your team elsewhere, and that is where you are expecting your revenue to be 15% higher over the quarter.
Not because of Vadhavan resources deployed somewhere will give us better. It is because of time cycle. You know, when a project starts, initial 5-6 months, you do at a less progress, and then the progress increases, per month turnover is more. So all these factors, if you put together, then you will find that the revenue is a little bit more than this quarter.
Understood. Best wishes for that. And my last question is, when do we see a meaningful scale-up in your quarterly revenue run rate? I'm not asking for specific guidance, but given that your order book is very large, perhaps you are capable of growing at least, say, 20-30% from your current base. Now, of course, this is dependent on how your project scale up and the milestone. Is that something that is going to happen in the next few quarters, or will it still take time?
Well, it depends upon the order, the nature of order, how fast they are converted to revenue. But if you ask me, as a company, we have got the capacity to ramp up the progress by 30% with our existing resources.
Right, but based on your current orders and the milestone and the promise for execution, do you see a significant ramp up in the coming quarters?
I mean, quarter 4 is okay. Quarter 1, quarter 2, that will be better than quarter 3, quarter 4. Definitely.
Oh.
Because few jobs like Pune Metro will be in full swing, like Abu Dhabi Port will be in full swing, like some more job which you have secured recently, data centers will give more revenue. So this 11,000 crore order what you have secured, they are now in threshold stage, initial stage. They will giving the revenue from next year, quarter 1, quarter 2. Yeah.
Okay. Thank you very much. That's all. Best wishes.
Thank you. The next question is from the line of Weber Shah from JM Financial. Please go ahead.
Yeah, thanks for the follow-up. So what would be our revenue growth guidance for FY26 given the weaker Q3?
18%.
But to achieve that 18%, the asking rate would be much higher in the fourth quarter. So we are confident of around 37,300 crore revenue in Q4?
No, I'm not talking about Q4. I'm talking about next year.
Okay, for FY27.
Entire FY27.
Okay, and for 26?
Number, it is not correct. It will be around 16% to 20% growth in next year in terms of revenue. That's what I've said.
And for FY26?
FY26, we are left on with 1 quarter now, and maybe we have achieved 2,300 crore Maybe it will be another 15-20% more, 15% more sales.
Compared to Q3 in Q4.
Compared to Q3, yeah, for Q4, yes.
Okay. And sir, what would be your outstanding receivables from Bangladesh? It was around 120 crores last quarter.
Yeah, 170 crore in this, as on December.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Aditya Sahu from HDFC Securities. Please go ahead.
Hi, sir. Thanks a lot for taking question again. Just one bookkeeping question over here. I did notice that, the numbers, so for example, historical numbers for, say, Q2 or the FY25 for that matter, were marginally different. If you can elaborate a little bit. So, because I see the numbers that are there for Q2 in the Q2 disclosures versus the numbers that are there for Q2 in the current disclosure of today, those are marginally different. Can you elaborate on that one?
I really couldn't pick up your question. If you can repeat once again.
So, just a second. Right. So, I was mentioning that the historical numbers, say for example for Q2, is marginally different from the disclosure that we, as compared to today's disclosure versus the Q2 disclosure that we had. Similarly, I saw this one for the FY25 audited numbers. If you can, throw some light on that one.
Yeah. So there is a accounting representation change which has the jointly controlled operations which we were doing in various JVs. So the grossing up of net line items have been done, and accordingly for this entire year, the numbers have been reinstated in the line item wise. However, the profit number and the P&L will not change. The profit and loss remains the same. And that's an accounting treatment which has happened, which has led to a change in what which were disclosed earlier.
Understood, sir. The reason, because I saw this on the audited numbers also, so that is the reason. Yeah.
So it's more of a we have benchmarked it with the best of the industry practices, and we took a view, and then this is a judicial decision which was taken to.
Understood. So this was a one-time exercise, is what you're saying, in terms of the grossing of net line items, as you mentioned.
Right. Absolutely.
Okay. Thank you so much, sir. Thank you.
Thank you. If that was the last question for the day, I would now hand the conference over to the management for closing comments. Over to you, sir.
So thank you so much. Thank you so much for joining and attending this call, and we wish you all a very happy and good day, and we wish that whatever we expect that things go well, and the next period of performance would be in line with the expectations which we have told to the investors. Thank you so much. Thank you so much for joining us.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect. Thank you.